Hello and welcome. Today is Thursday, the 21st day of September 2017, and welcome. Let's take a look at Bitcoin on a few different time frames. My name is Derek, and I've changed the audio, at least a different microphone. So if the sound is a little different, well, that is the reason why. I think the sound is fine enough, at least for me to use this device. Alrighty. What do bear markets do? At least how they start. When you start, you have to come from a bull market. And at least by the book, you can see how it starts to go sideways within, say, an average like this 18, or pretty much any moving average of around a dozen to 2 dozen periods. It has to do such. And then you get your fall like that. Okay, so we've had one leg lower and a significant move at that, going from 5,000 to 3,000. That's about a 40% correction. And I know with a lot of other markets, that is the end of the world for things if the markets fall in that nature, giving up 2/5 in one move. But this is Bitcoin. And then you come up in here. This is, again, by the book. You resist an area where it was in the area of the 18 average of highs, and it's barely now starting to fall below it. So oftentimes within markets, you ask yourself the question, what is the status or the current phase? And the current phase in here was this thing is just falling like no other down in here. Then the rebound attempt, correctionary phase from that move, and that's how it's been ever since it got above the 18 average of lows. It will remain in that correctionary phase until it can have a clear break on either side of the highs or the lows. And now that's what's happening. It's barely going below that 18 average of lows, keyword barely. So the status, which has been in place for around 3 or so days, 2 full days, and the most portion of this and this one has been just trading within here, correcting. And of course, if making a bull market, its attempt would have to get above here. But no, its current status now is attempt to leave that phase and start a new one. And the new phase you label as leg to lower. Now, usually on another leg, you're expecting, okay, where do you, on a bear market, you're expecting a lower low. And this could very easily be the case in one of two ways. One way is just boom, goes way down. And the second one is it finds a higher low or matching low and then goes up and then down again. And I say that because the length of the move last time was massive. It didn't find support anywhere in here. So a matching low of 3,000 would be a significant drop from this point. If we shorten this out to the 4-hour time frame, what we can see in here is it had this support, this support. So 38 to 38 and a half was that key level. And it obviously gave in 3 periods ago, earlier today. And when it broke, oh, basically it gave in after the 2.5 minute warning. After I was saying, yeah, Bitcoin's not really doing too much. And at 10 o'clock in the morning, down it started to go lower. So it's had one decent size leg lower. And even going down to 34.60, well, decent size leg would be somewhere around here. So obviously it's at the upper end of this area because a decent sized leg, well, where did you break from? I mean, this type of move in here would be the lowest end of what I would call a decent move. Because if it only were to say go down to here, that would be a small pierce. No, it's already had a leg lower. Whether it's over, no. So it's market conditions. And here, correctionary phase. Breaks below. Oh, it's attempting to leave it. Okay, back in it. And basically in here, 37 change. Okay, it did so. It left it. Now the phase is leg lower. Let's move this on to the weekly. And this has been making an obvious pattern of higher highs and higher lows. And the 18 average of lows has been held very well as a support mark during this bull market, which has now been in about a 2 year or so duration. I don't see any signs yet that this is going to top four. This is like like a lot of these other ones. It's bounced from the 18 average of lows and it hasn't given in. Okay, this doesn't look like the nicest of candle to do like that cattail. You know what? So be it, yes, but it's also in a trend where it's in an up move. These areas have presented great buying opportunities. And is this another one? Well, they've all worked out before in the past. Obviously, if you get any type of market that, well, it shows something like this where you have a sustained uptrend, and if a market makes a pattern of lower highs and lower lows, to say that the buying spot here was a good one if you buy and hold, well, obviously that's not the case. But that's always part of the risk versus reward within this game. Now, a couple quotes from the YouTube teacher, who person does videos like this that I've inspired myself to do it from. That's Brian Shannon from Alpha Trends. And on his channel, he's often said things about, these moves, these sell-offs are guilty until proven innocent when you have a longer term trend like this. Your moving averages are rising, that every single time it pulls back, it's guilty until proven innocent because more times than not, that's an easier way of saying it, it's going to rebound and not only get back to where it came from on its previous high, but make new highs. And then, of course, another one is risk management's job number one. And I like to say risk reward management is job number one. Essentialize, of course, just looking at the two numbers together. But when you're aware of yourself within your investing slash gambling decisions in which you are making, assessing your risk and your overall reward, I think is a very smart decision, and it's something that I'm glad that I'm decent at doing on my end. All right, then. So thank you for tuning in and have yourself a great day. Bye bye.